Good afternoon. My name is Ansumana Sane. I am the Managing Director of AMRC.
Good afternoon. My name is Ami Tunkara. I'm the Director of Finance, AMRC.
Good afternoon. I am Sekou Kujabi, Deputy Managing Director of AMRC.
Good afternoon. My names are Lamin Jata, Accord Associate External Auditors.
Good afternoon. My name is Kadi Sise, Director Internal Audit AMRC.
Good afternoon. I'm Omar K. Jallo, Audit Partner, Accord Associate External Auditors.
Thank you so much for the introduction. Well, I just want to also observe there are ground rules on the ground here where we put all our mobiles on silence in order to avoid distraction during the proceedings of the presentation. Can we all put our mobiles on silence? You remember? Thank you so much. Mr. Chairman, we have a new member in our midst. Can you rise up and introduce yourself? Thank you, Director. Mr. Chair, I think we can go straight to the business, starting with the presentation of the report. First, before we do that, we want to administer the oath. The clerk will be coming around to do whoever is going to be giving the presentation, or you can chip in for clarification. You are going to be under the oath of affirmation, please.
I, Yaya Sire Jallo, do hereby affirm that I will speak the truth, the whole truth, and nothing but the truth. So help me Allah.
I, Ansumana Sane, do hereby affirm that I'll speak the truth, the whole truth, nothing but the truth. So help me Allah.
Good afternoon once again. I, Ami Tunkara, do hereby affirm that I will speak the truth, the whole truth, nothing but the truth. So help me Allah.
In Jata, do hereby affirm that I will speak the truth, the whole truth, nothing but the truth. So help me Allah.
I, Omar K. Jallo, do hereby affirm that I'll speak the truth, the whole truth, nothing but the truth. So help me Allah.
Thank you so much, Mr. Chairman. We want to apologize for the late start because already you are slated to start by 2:15 prompt. But there is a lot of parliamentary engagement from different directions that really distracted. And that is why the entire membership are not around. But already we've slated and we must do this presentation today. Sorry for any inconvenience. On that note, we want to start with the activity right away, starting with the activity report. I don't know whether you have a revised version with you or you want to take us through the report, probably page by page, highlighting important areas so that we can manage time.
I'll hand over to the Managing Director, please.
Yeah, we will like to go through the report page by page, but it will be a little bit quicker. Yeah. Okay, so that's fine. That's fine. Page number, okay, that's fine. Sorry, it's okay. Just skip because of that one. Okay. Honorable Chairperson of the Public Enterprises Committee of the Assembly, other honorable members of the committee, our chairperson of AMRC, Board of Directors, external auditors, management and staff of AMRC. Good afternoon to you all. We are here today to present to you AMRC activity report and financial statement for the year ended 31st December 2020. We start with page 1. We looked at the principal activities and in the introduction. Here we highlighted the act that established the AMRC to by an act of parliament, AMRC Act 1992, to manage the assets and liabilities of the defunct GCDB, and subsequently take over the management and administration of assets of the Gambia government, which the ministry from time to time may assign to the institution. This actually includes the portfolios of assets from the various commissions that were established after the July 22 military takeover, and the recovery of the former Keystone Bank on behalf of the Ministry of Finance through the Central Bank of the Gambia in 2017. One of our core mandates is debt recovery, and during this period, the board, management and staff have worked very hard to improve the revenue generation capacity of the institution. In July 2017, we signed an MOU with the Central Bank through the Minister of Finance to recover debts of the former Keystone banks, amounting to 665,840,802.60 budus, with an initial commission of 5% from 2017 to March 2019, but this was increased to 15% in April 2019 to date. The corporation recovered a sum of about 46,465,225.97 budus on this portfolio from 2017 to 2020. Out of this amount, 44,302,350.97 has already been transferred to the AMRC Camco account. As an institution, our vision statement is to transform the corporation into a premier institution in debt recovery and property management that provide skillful and competent professional and profitable service in debt recovery for government, banking and financial institutions, and the provision of shelter, rental accommodation, assets and property management and disposal for public and private sector and the general public. We have our mission statement, is to take over and acquire all assets and liabilities, including properties, fixed assets and own loans due to the defunct Gambia Commercial and Development Bank, buy and sell and deal in any real or personal property, stock, shares, and securities of every description, and take over the management and recovery of any assets of the government which the Minister of Finance may assign to the corporation from time to time. Our governance structure: the corporation is governed by a board of directors appointed by the President through the Minister of Finance and Economic Affairs. The board comprises of a chairman, the chairman, and 7 other members, including the managing director and the administrative manager as the current acting secretary to the board. The debt recovery portfolio: the corporation since its inception in 1992 has recovered about 81% of the entire Commercial and Development Bank portfolio, to the tune of about 273 million from the various accounts. That's the commercial loan account, development funds, and managed funds account. The balance outstanding on this debt consists of mainly unsecured debts with scanty documentations. The financial report for 2020 indicates a total collection of about 18 million, 1,634 dollars from the various accounts mentioned earlier. That is the commercial, development, and managed fund accounts. This compared to 2,665,813.22 voted in 2019. This shows an increase of about 575% from the previous year, 2019. This increase is mainly due to management's result to maximize revenues. Commercial loans, bit of it. At the end of 2020, the collection was about $264,694.58 butus, with an outstanding balance of $62,715.42 under this portfolio. The corporation will continue to make all necessary effort to ensure recovery is maximized. Under the development loans portfolio, these were mainly agricultural development loans given to farmers under First Republic in the form of tractors and agricultural tools, fishing gears through the Ministry of Agriculture and Fisheries and Water Resources. The sum of $11,347,345 were recovered from the portfolio through the sale of some plots from the Brikama Nyambikala. Under the managed fund, these were government guaranteed loans to the area councils and other business enterprises. These were also disbursed through the Ministry of Finance in the First Republic. A total of $6,389,595 was recovered during the year under review. The outstanding balance as of 31st December from this portfolio is about $20,824,888.70 butut compared to $26,464,663.78 butut in 2019. Page 5, we looked at the land and rental income of the corporation. The sum of $7,770,753 was generated from the sale of land and rental income in 2020, compared to the sum of $8,893,000 in 2019. This represents a 12% decline from last year. The decline is due to performance recorded from the Farafenni guest house resulting from the COVID-19 pandemic. And there were no land sales, as the land at Lameng Daranka was sold out except for 2 plots under dispute. Land and rental income, however, constituted 28% of the total income, and the breakdown of the income lines that constitute this portfolio was as follows. The rental properties, that's special account 1. We have about 20 developed properties under the management of the corporation, and 12 were rented out in 2020. While 14 were rented out in the previous year. However, 2022 of the properties were out of rent because of their poor status. The sum of 5,519,053 was generated for the year ending 31st December 2020, compared to the sum of 6,698,000 the previous year. We have sale of forfeited properties, special account 2. 800,000 was realized from these sales of one empty plot at Oliundum in 2020, compared to 0 sales for the previous year. Sale of land at Lamin, Daranka, no revenue was generated in this period, but the previous period about 1.4 million was generated. Income from Farafenye Guest House, the sum of 516,700 was received during the period, compared to 795,000 over the previous period, 2019. The decrease was a result of a scaling down of the operation due to COVID pandemic. Page 6, we have sale of land. The sum of 935,000 was generated from this portfolio in 2020, compared to no sales the previous year. So we have other incomes. These are revenue generated from through management initiative and diversification programs. These include revenue centers such as disposal of assets and other considered scrap value, realizable values, interest on deposit accounts, and interest on staff loans, and recoveries from rice and cement. The revenue generated for the year 2020 was about $927,061, compared to the sum of $1,131,887 the previous year. The total collection represents 3% of the total income. We have a commission on Keystone Assets Management Company, CAMCO. This portfolio represents 15% of commission received from the recoveries on Keystone Management Company. The sum of $1,195,196 was received, compared to the sum of $2,590,562 the previous year. The decrease resulted from the scaling down of working hours during the COVID-19 pandemic. Most of the staffs did not go to the field to pursue debtors. We have interest on fixed deposit investment. This is the interest gained from the investment of fixed deposit. In 2020, there was no interest, mainly due to cash flow issues associated with the beginning of the COVID-19. The sum of $524,625,000 was generated the previous year. Page 7, we give the income and expenditure. The turnover, the corporation generated 27,894,645 as turnover for the year ending 31st December 2020. This compared to the sum of $15,805,628 the previous year, representing a growth of 76%, resulting mainly from the sale of the 52 plus from Brikama Nyambikala layout during the last month of the year. The total turnover comprises receipts from commercial loan recoveries, land and rental income, and other operating income, finance lease income, commission on CAMCO recoveries, and interest on fixed deposit. Then the expense overview, total expense for the year ended December 2020 amounted to the sum of 19,834,678 against the sum of 23,856,517 for the previous year, 2019. The period under review was a difficult year when most of the corporation activities were scaled down due to COVID. As a result, most of the expenses lines were cut and prioritized according to the corporation's revenue generating capacity between the first and the third quarter. Results of the year ended 31st December 2020. The corporation recorded a surplus of about 8,059,967 for the year ended 31st December 2020, compared to 8,050,896 in the previous year. The movement from deficit to surplus resulted from the improved revenue line, especially development loan, during the last month of 2020, and the cost in some of the expense lines, especially non-essential. Page 8, the assets, liabilities, and equity. Non-current assets. The corporation total non-current assets for the year ended December 2020 was valued at $3,913,904 at book value, compared to the sum of $5,196,490 the previous year. This shows a decrease in the net book value of the total assets by 25%. The decrease in carrying value of the asset resulted mainly from the disposal of one of the utilities vehicle. Investment. The corporation recorded a sum of $560,000 at the end of the year 2020, compared to the sum of $870,000 the previous year. The decline in this investment figure was a result of the sale of 4 plots of land at Sanya. We have the current asset, which is subdivided into receivable, foreclosed properties, cash and bank balances, and fixed deposit. This total assets, current assets, recorded a net of $277,630,178 for the year ended 2020 against $280,247,239 the previous year. The drop in the net value was due to decline in the sale of property, sale of plot of land under the foreclosed properties. The list of debtors, cash, and bank balances are provided on page 17 and 18 of the financial statement. Equity and reserve. This portfolio stood at $267,706,619 as at 31st December 2020, compared to the sum of $270,830,109 the previous year. The portfolio fell by 1% as a result of the decline in the value of the recognized foreclosed properties and total assets. Total equity and liabilities. This portfolio stood at $282,104,082 as at end December 2020 against the sum of $286,313,729 the year before 2019, the year ended 2019. So we have performance analysis analyzing the ratios. The operating profit and current ratios are used to determine how efficient the corporation is generating profit from the available resources and its ability to pay its liabilities. No, I said 282 million. 282 million. 104,082.
Okay.
Can I continue?
Yes.
Okay. Operating profit margin for 2020 financial year was 29% compared to a margin of minus 50% in 2019. The movement from the negative to positive margin demonstrate a better performance from both the revenue and the operating profit for the period under review. The current ratio also indicate how the corporation is efficient in paying its current liabilities from its assets. The results for the period indicates 29 times in 2020 and 26 times in 2019. This therefore demonstrates a fair performance recorded in the working capital over the period. Staff complement of the institution. The corporation had 51 staff on its payroll at the end of 2020. The managing director being the head of the corporation, assisted by the deputy managing director and 3 line directors, 5 managerial staffs and 7 officers, and the rest were supervisory and clerical staffs. The comprehensive list is also attached as Appendix 1. Staff training and development. The corporation continues to train, equip, and strengthen its staff at all levels to be able to acquire requisite skills which would enable them to perform their jobs and responsibilities efficiently and effectively, thereby facilitating the attainment of the corporation goals and objectives. The corporation training and staff development strategy is geared towards acquisition of professional and vocational skills in various areas like strategic management, finance, marketing, law, information technology, and other areas where there exists training gap. In view of the above, the corporation trained 2 members of its staff on short-term courses and 4 on long-term courses. List of the staff under the training are also attached. Strengthening corporate activities. Since the establishment of the corporation, it has achieved a remarkable success in pursuit of its dual objectives of debt recovery of a non-performing asset of the defunct GCDB and management and disposal of forfeited properties arising from the various commissions established after July 1994. As part of its efforts to transform its operation, the corporation in July, as earlier stated, signed an MOU for the recovery of debts of the former Keystone Bank on behalf of the Ministry through the Central Bank, Ministry of Finance through the Central Bank. The corporation also has some forfeited foreclosed properties under its management that are dilapidated and can venture into public-private partnership with private investors on profit-sharing basis. Challenges faced by the institution. The current Act, AMRC amended 1994, had made it difficult for the corporation to diversify and venture into other lucrative investments, such as working with the commercial banks and other commissions on either commission basis or factoring of their secure loans for recovery. There exist long delays in court processes, leading to a list of pending legal cases, inability of the corporation to execute judgment orders because of appeals or absence of judgment debtors, assets upon which to apply judgments or enforce judgment. Most of the remaining Gambia Commercial and Development Bank loans and other loan portfolio are too small to recover through litigation. A good number of loans have no collateral securities, thus making recovery or collections virtually impossible. Despite the challenges, successes registered during the period under review, the corporation registered a surplus after a prolonged struggle with a deficit, succeeded in the design and demarcation of 300 plus at Brikama Nyambikala layout, effected sale of 52 plots from Brikama, Nyambika layout within a period of 1 month, and staff sent on training successfully completed their programs of study and resume work. The way forward, the corporation is recommending further amendment to the Act, AMRC 1992, to strengthening the corporation and ensure its meaningful contribution to national development. This amendment will obviously enable the corporation to enter into lucrative ventures and partnerships with the public and private sectors, including government institutions, commercial banks, financial institutions, and the general public. Authorization of the financial statement by the board. The corporation's financial statement for the year ended 31st December 2020 were authorized for issue by the board of directors on the 7th of June 2020. Signed, Ansumana Sane, Managing Director. Thank you very much.
Thank you so much, MD. I think we can go to the financial statement. Straight. You okay?
Good afternoon, Honorable Chair, members of the PEC Committee, external auditors, the board chair of AMRC, and management of AMRC. I will take you through the financial statement of the Assets Management and Recovery Corporation. Honorable Chair, in order not to waste time, can we move on to page 10 of the financial statement? Yes. Are we all there? Yes. Assets Management and Recovery Corporation, AMRC, financial statement and report for the year ended 31st December 2020. The statement of profit or loss. The reported currency is the Gambian dollar. And the period under review is 2020, with a comparative period of 2019. We have the revenue. The revenue have loan income, recoveries from commercial, GDCB loans. Amount recovered in 2020 is $18,001,634. $2,665,813 was recovered in 2019. We have land and rent income. $7,770,753 was recovered in 2020, compared to $8,893,000 in 2019. Other operating income, $927,061 in 2020, compared to $1,131,887 in 2019. The finance lease income, $1 in 2020 and $1 in 2019. The commission recovered from CAMCO stood at $1,195,196, compared to $2,590,562 in 2019. Interest on fixed deposit investment, nothing was generated in 2020. $524,365 was generated in 2019. Therefore, total revenue for the year ended 31st December 2020 stood at $27,894,645, compared to $15,805,628 in 2019. We have the expenditures. Administrative expenses, $8,605,171 was reported in 2020, compared to $10,011,649 in 2019. Staff cost, $9,420,039 in 2020, $8,127,063 in 2019. Repairs and maintenance, $337,382 in 2020, $699,346 in 2019. Depreciation charge for the year 2020 is $1,432,086 in 2020, compared to $1,568,366 in 2019. Bad debt provision. There was no bad debt in 2020, and $3,450,100 was recorded in 2019. Therefore, total operating expenses for the year under review is $19,834,678 compared to $23,856,524. Profit for the year under review is $8,059,967 compared to a loss of $8,050,896 in 2019. Taxation. There was no tax charge in 2019 and 2020 and 2019. Our profit for the year under review, $8,059,967 compared to a deficit of $8,050,896 in 2019. We turn to page 11. We have the statement of the financial position for the year ended 31st December 2020. We have the assets, non-current assets, property, plant, and equipment, $3,913,904 in 2020, compared to $5,196,490 in 2019. Long-term land investment, $560,000 in 2020, compared to $870,000 in 2019. Total non-current assets for the year under review is $4,473,904 compared to $6,066,490 in 2019. Current assets, we have the trade and other receivables. $13,850,270 was reported under the period for the year ended 2020, compared to $11,872,495 in 2019. Foreclosed properties, $254,665,568 compared to $266,012,913 in 2019. Cash at bank and cash in hand, we have the $114,340. $114,340 compared to $2,361,831 in 2019. Total current assets for the year under review is $277,630,178 compared to $280,247,239. Total assets, $282,104,082 compared to $286,313,729. We have the accumulated fund and liabilities. Accumulated fund, detailed out on page 10, $13,041,051 compared to $4,817,196. The recognition of foreclosed properties, $254,665,568 compared to $266,012,913 in 2019. Total accumulated fund for the year under review is $267,706,619 compared to $270,830,109 in 2019. Non-current liabilities, we have the long-term loan, which stood at $4,792,033 in 2020, compared to $4,792,033 in 2019. Current liabilities stood at $4,792,033 in 2020, and $4,792,033 in 2019. Trade and other payables, $9,605,430 in 2020, $10,691,587 in 2019. Total current liabilities, $9,605,430 compared to $10,691,587 in 2019. Total equity and liabilities, $282,104,082 in 2020 compared to $286,333,000 $313,729. These financial statements were approved by the Board of Directors on the 17th June 2022 and were signed on its behalf by the Board Chair and the Managing Director. We now move on to page 12. The statement of changes in accumulated fund for the year ended 31st December 2020. Balance as at 1st January 2019 is $50,832,292. Total $50,832,292. Loss for the year 2019 is negative $8,050,896, and a total of negative $8,050,896. Prior adjustment is $37,964,200, and a total of negative $37,964,200. Balance as at, it should be January 2019. Balance as at 31st December 2019 instead of December 2020. Sorry for that. Yeah, it should be balanced as at 31st December 2019. Yeah, 2019. It's 31st December 2019. 2019. 19, yeah, instead of 2020. Yes. It's $4,817,196, and a total of $4,817,196. Balance as at 1st January 2020, $4,817,196, and a total of $4,817,196. Profit for the year, $8,059,966, and a total of $8,059,966. Prior year adjustment, $163,889, and a total of $163,889. Balance as at 31st December 2020 is $13,041,051, and a total of $13,041,051. On page 13, we have the statement of cash flow for the year ended 31st December 2020. We have the operating activities. Operating profit for the year ended 31st December 2020 is $8,059,966, compared to a loss of $8,050,896 in 2019. Depreciation charge for the period under review, $1,432,086 in 2020, $1,568,366 in 2019. Provision for bad debt, nothing was provided in 2020 compared to $3,450,100 in 2019. Retained earnings adjustments, $163,890 in 2020 compared to a negative of $37,964,200 in 2019. Total operating before working capital changes, $9,655,942 compared to a negative of $40,996,630 in 2019. Increase in receivables, $1,977,776 in 2020, which is an outflow, compared to a decrease of $768,243 in 2019. Foreclosed properties, increase or decrease in foreclosed properties, $11,347,345 in 2020, compared to zero in 2019. Increase or decrease in provision, nothing was recorded in 2020, and a negative of $3,450,100 in 2019. Increase or decrease in payables, negative $1,086,158 compared to $6,264,910 in 2019. Increase or decrease in recognition of foreclosed properties, negative $11,347,345 in 2020 compared to zero in 2019. Cash flows from operating activities stood at $6,592,008 in 2020 compared to negative $37,413,577 in 2019. Investing activities, acquisition of property, plant and equipment, negative $149,500 in 2020 compared to negative $3,059,293 in 2019. Investments, $310,000 in 2020 compared to $40,900,000 in 2019. Cash flows from investing activities therefore total at $160,500 in 2020 compared to $37,840,707 in 2019. Financing activities, nothing was recorded for both years respectively. Cash flows from financing activities. You have the net increase or decrease in cash and cash equivalents. $6,752,508 in 2020 compared to $427,130 in 2019. Cash and cash equivalent as of 1st January 2020, $2,361,831 in 2020 compared to $1,934,701 in 2019. Cash and cash equivalent as of 31st December 2020 is $9,114,339 in 2020 and $2,361,831 in 2019. Honorable Chair, this is the end of the financial statements for AMRC.
Thank you very much, Madam Finance Director. I think that is. Can we move to the management letter? But first, the audit opinion by the external auditors. Like we have an internal arrangement since these presentations are before us. The documents are with us. We'll go through them. So in the management letter, we'd like you to flag only the highly risk areas, the adverse audit findings that are risky. You flag those things. And we don't need management response as at now, since we'll be coming for consideration. And during the consideration, you will be at liberty to respond adequately to those issues. I think that is the procedures. From the opinion, we can go to the.
Thank you very much. The Chair and the honorable members, I would like to welcome you to our auditor's report on page 7, which is on our letterhead on the financial statements. Yeah. Independent auditor's report. Yes. Independent auditor's report. To the board members of the Assets Management and Recovery Corporation, AMRC, opinion. We have audited the financial statements of the Assets Management and Recovery Corporation, AMRC, set out on pages 10 to 25, which comprise the statement of financial position as at 31st December 2020. Income statement, the statement of changes of cash flows for the year then ended, 31st December 2020, and the notes to the financial statements, including a summary of significant accounting policies. In our opinion, the financial statements present fairly, in all material respects, the financial position of the corporation and its financial performance and its cash flows for the year then ended, in accordance with the requirements of the Companies Act 2013, AMRC Act 1992 amended, and Generally Accepted Accounting Principles, GAAP. After that, we have the rest of the standard report, but there is one element that we draw attention to, that is the order audit matters. On the same page, order audit matters. As stated in note 20, on the financial lease between NAWEC and AMRC, there has been deviation from the accounting treatment with regards to finance leases, IAS 17. IAS 17 states that at the commencement of the lease term, the lessor should record a finance lease in the balance sheet as a receivable at an amount equal to the net investment in the lease. With the NAWEC AMRC arrangement, there has been no investment carried out by AMRC on these assets due to the fact that the assets were handed over by government to AMRC. Therefore, we were unable to recognize the net investment on the related assets on the balance sheet of the corporation. This means there is a lack of compliance with the accounting standards on leases with regard to the treatment in the balance sheet of the corporation. Thank you very much. Now we can move on to the management letter. We can go straight to the first point on the report, which is a high risk. That is on page 6. Yeah, control issues. 2.1, lack of disaster recovery plan, high risk. Observations. We noted that the entity does not have any disaster recovery plan in place for maintaining the going concern and operations of the corporation in case of a disaster event occurring. Implications. An entity without any disaster recovery plan in place exposes its future at risk. In the event a disaster occurs, it may lead to significant delay in restoration of the entity's operations. In some instances, it may result in complete closure or liquidation. Recommendations. Management should ensure that there is adequate disaster recovery plan in place to ascertain swift restoration of system and operations. A good disaster recovery plan will have the effect of minimal disruptions of business operations in the event a disaster occurs. Management response. Okay. Okay. Yes, the next one, 2.2. That's also high risk. Insurance cover of property, plant, and equipment, PPE, high risk. Observations. During our review of the insurance file of the client's fixed assets, we observed that there is no updated insurance policy in place covering the value of the building and its equipment from 24th July 2020 to 24th July 2021. We also noted that the policy that covered the value of the building and equipment from 24th July 2019 to 24th December 2020 covered for a total value of $2,424,400 rather than the net book value of $3,705,563. Implications. Lack of adequate insurance cover could expose the corporation to increased risk when unexpected losses occur. Recommendations. Management should ensure that all the value of the assets of the corporations are adequately insured. The next item with high risk classification is on page 13. 3.2, ex-staff loans, high risk. Observations. During our review of the staff loans, we observed that a loan balance of $1,729,556.2 for ex-staff has not been moving and none of them made payments in the subsequent year period. Implication: ex-staff not paying their loans might lead to financial constraints and liquidity problems. Recommendations: management should ensure that a payment plan is given to each staff owing them and make follow-ups for repayments. The next item that's the end of the high-risk items. Yes, the prior year management letter points the status of implementation. The first item there is the receivables. Receivables, that is the ex-staff loans. During our review of ex-staff loans, we noted the following non-moving ex-staff loans balances as at 31st December 2019 as follows. We have the list there. Yes. The second point is other receivables. That is, during our review on receivables of the corporation as at 31st December 2019, we noted the non-moving account, which makes us question the recoverability of the balances as follows. That was a debt factoring of 668,000. Then we have the comment there on the status of implementation. That's B. Management has engaged Mr. Sana Jaite to currently see the possible recovery of the debt. The outcome of the engagement will direct the next line of action management will propose to the board for consideration and approval. The other point is on the rates. That has already been addressed, yeah. Then the last point is non-moving creditor balances. During our review on creditors, we noted the following creditor balance that has not moved since 2017. That is GNPC as a creditor, and the amount is 197,000. The recommendation was, we recommend that management look into the above balance to ascertain the viability, to ensure the validity, to ensure the closing credit balance in the financial statements is not misleading to the users of the financial statements. Then the status. The corporation has sought and got approval from the board for a compensation package to GNPC. Management is hopeful that the said compensation will start before the end of the year 2021. I think that's the end of the report. Thank you very much.
Thank you so much. I think this has brought us to the tail end of the presentation. The committee would like to which we really appreciate, and we believe the cordial relationship will grow from strength to strength. As you may understand, we are partners in development. The National Assemblies and the PEs are two sides of the same coin, completely inseparable. We are here to look at your work, conducting oversight to help you improve upon it. As you may understand, our doors are open for you to barge in, and any issue you have with regards to legal issues or any other advocacy issues, you can consult us, and we'll work together to see how best we improve and make sure that we attain value for money in that dimension. Other than that, we would like to inform you that we will inform you in due course with regards to the consideration. As it is indicated in our previous schedule that you're supposed to be here tomorrow, but we will communicate to you whenever you will appear before us for the consideration. Other than that, Mr. Chairman, who is also given the honorary title, Honorable Chairman, as you are seated before honorable members and you have that prefix attached to your name, do you have anything for us?
Thank you very much, Honorable Chair. In fact, I should have started with that, but since we are running against time, having started late, I reserve these comments to the end. First and foremost, I must congratulate you on your election to this August body and the mandate that you've been given, particularly by this committee to oversee the corporate corporations. And we are delighted to work with you. And for your information also, I am chair of a new board that started work in March. Am I right? March this year. So I believe we are two new institutions working together. Although your mandate is longer than ours, we are for 2 years, isn't it? Okay, 2 years. But within these 2 years, we expect to have a very fruitful partnership and rest assured of our cooperation, participation, and openness in delivering for national development. AMRC is a household name in this country, and they have done a lot in the past. And we know the golden objectives of its establishment in 1992 and subsequent amendment in 1995, but still relevant. But is the vision and mission and aim of the new board to transform the corporation into an organization that is fit for purpose for the 21st century. And I am glad to have this committee, new and with, I can see some dynamic faces, young and everything, and is to work with in pursuing, in fulfilling our mandate and helping us in the transformation. Like I said again, rest assured of our support and cooperation. And we equally look forward to your leadership, guidance, and cooperation in moving this forward. On that note, I thank you very much for this opportunity to at least have with you for the first time, face to face, and my opportunity to talk to you. Thank you very much. Thank you.
Chairman, for that wonderful statement, and I think you have reassured us the institution commitment in terms of partnering with us. I think that will really pay a dividend because there are a lot of issues that we need to work together to make sure that they are attained at the end of the day. One thing that is important, the most unfortunate part, we are an elective body. You put us here to be your representative, which is very, very important. At the end of our time, we'll go back to the people for review, whether really we've done justice to what has been done. So it's incumbent upon us to write legacy, a positive legacy for that matter. And this cannot be done without having a cordial working relationship with you. And thank you for reassuring us that you will really partner with us. On that note, can somebody move a motion for us to adjourn this particular meeting? Members?